When you look at the extra lockdowns or extra restrictions in Germany, in Italy, in France, what does it mean for the kind of recovery that you're expecting, and what does it do to yields?
Well, these are very sobering news for all of us in Europe, and it's unclear how the pandemic is going to develop for this winter in the Northern Hemisphere. In terms of markets, of course, there is some unsettling situation. Pimco had warned that it would be, we went down the elevator, it will be up the staircase with bumps along the way, which means that you have to keep quality in portfolio regardless of which asset class you're looking at. Safe government bonds belong to portfolio, higher grade credit, and when it comes to quality, a fair dose for equity, a fair dose of quality. So I think, you have to remain prudent. And that said, also look a little bit out on the horizon and differentiate the short-term volatility and all the sad news that we're going to confront with probably a better outlook sometime in 2021.
Geraldine, what does it mean for central banks? If you look at the trend that we're looking at, which is more lockdowns, so more economic pain, will the lift come from, a stimulus, fiscal stimulus, or once again, will it be left for central banks to do more?
I think both fiscal and monetary will have to be utilized, and they will have to cooperate. Of course, if there is, more fiscal stimulus to deal with a second wave of pandemic, this also means more issuance of treasury bonds and government bonds throughout the world. So there'll be a tendency for curve to steepen, and we will have to see if central banks step in to keep the situation under control, which means that other safe haven like gold could benefit.
Geraldine, I want to congratulate you. As you mentioned, Pimco's absolutely nailed this vector of lower and lower yields and the sluggishness that's out there. Do you envision a new regime of new, greater negative yields in Europe? I see Swiss 20 today. I see the German 2-year really begin to test recent, larger negative yields. Do you envision new, larger negative yields?
It's totally possible in the sense that people will run for safe assets if the pandemic development continue this way. But these will probably be, for a few months, and then things will normalize again. But certainly over the medium term, we don't think that yield will be going up very high. Regardless, this is going to take years to be absorbed. And central bank will have to help for this recovery. So very much so in the short term, yields could go much lower as people seek safe haven.